to analyze the market. So as usual, we start off by looking at the economic calendar to see if there are any reports of high importance due out. So let me start with that. Again, always make sure you're using the correct time zone because I'm in Rwanda, so the time zone is GMT +2. So all these times I'm going to be talking about GMT +2 times. So today is Tuesday, the 29th of September. So that's the first thing we want to check to see if there are any reports of high importance coming out today that could affect the market we're trading. And the market we're trading is the Euro US dollar. So we're looking for reports of high importance that could affect the Euro or the US dollar. And we'll also note reports of medium importance. Okay, so that's today. Let's see. You can just ignore reports of low importance. So you can, again, remember this are all GMT +2 times. This are all Rwandan times. So we have that from Japan. These are all reports of low importance. That's from France. You can just ignore all these reports of low importance. And then at 10:30, we have this mortgage approval, mortgage lending reports of medium importance from the UK, but obviously that will have more of a relevance to currencies paired with the pound, not so much to us with the Euro US dollar. Excuse me. And then you can ignore the reports of low importance. But at 11, again, this is a GMT +2. So always remember that. So this at 11, Rwandan time at the Euro area, we have these reports of medium importance that are due out. So obviously that could affect the Euro, hence it could affect the Euro US dollar. So we'll note that, and you know, if we do place a trade before then it's a good time to check the market around that time when these reports of medium importance come out. That's if you have a live trade before that, or you place a pending order before that time. Then again, just ignore the reports of low importance. Now, South Africa has no relevance to us. Ignore the reports of low importance. And let's just come straight to the report of high importance today. So the first report of high importance today is at 2 o'clock. Again, that's Rwandan time, which will be 1 o'clock UK or Nigerian time. So at that time, we have the German inflation rate, and that's a report of high importance. And again, always remember that there are 4 reports that are always of high importance. There are always 4 reports that, when you see them, that should make you be very, very wary trading before that report. And those 4 reports are the inflation rate, like you see here, inflation rate of consumer price index, unemployment rate, gross domestic product, and interest rates. So those 4 reports are always of high importance, and you really, really want to avoid trading prior to those reports. So this is the first report of high importance today, the Germany inflation rate. And of course, Germany is the main powerhouse in the Euro area. So that would obviously affect the Euro. So you definitely want to avoid trading prior to this report. So we're going to avoid trading. We're not going to place any orders. Well, I shouldn't say we. You might want to break the rules. I would not be I would not be placing any pending orders or any trades prior to this report at 2 p.m. GMT +2. Because it's a German inflation rate, so there's a high probability of the Euro US dollar trending sideways prior to this report. And again, remember the words always or never do not exist in the market. So I'm not saying the market would always trend sideways prior to this report, or it would never trend before this report. But more often than not, it will trend sideways. And as a trader, you base your trading decisions on what usually happens. not what really happens, knowing full well that it's not an absolute, it's not always. So because there's a high probability that the market will trend sideways prior to this report, then I'm going to avoid trading prior to this report. Let's have a look at the rest of today. Again, just ignore the low. And at 2:30, we have this US report of medium importance. Usually, again, like I always say, the reports of medium importance just give you an indication to check the market, to check to trade if you have pending orders there or you have a live trade in play. And then the final report of high importance today is at 4 p.m. Again, this is a GMT plus 2 times. So the last report of high importance is from the United States. And of course, we're trading the euro US dollar, but also reports of high importance coming out of the United States affects all markets. So for example, even if you're trading the pound Swiss currency pair, which doesn't have dollar in it, the US will still affect, the US report will still affect that market. So reports of high importance throughout of the US would affect all markets, all currency pairs, all stock markets, all stock exchanges, commodities market, bond market, all markets, all financial markets, all currency pairs are affected by reports of high importance due out from the United States. So again, always remember that. So again, the thing about trading it, which today again is a good example, is that despite the fact you have the core information, the core rationale, the core facts about trading, but also you need to put some, you need to decide how you use the information, how you apply the information, and this is where you're using, you know, I don't want to say common sense, but this is where you need to look critically at everything and every day, and you make a judgment as to when to trade, what time to trade, how you're going to trade. So today is a good example. So ideally, you don't want to trade prior to the last report of high importance. That's the ideal teaching and the ideal thing you want to do. So ideally, you want to wait till 4 p.m. when the United States Consumer Confidence Report is announced before you trade. That's ideally what you want to do. But again, you need to look at it from a practical point of view, take everything into consideration and then decide, because today, this German inflation rate, which is due out of Germany, this inflation rate report is actually more important than this consumer confidence report due out of the United States. So these are the kind of judgments you need to make on a daily basis as a trader. So for today specifically, I would definitely not trade prior to this report of high importance from Germany at 2 o'clock. So at 2, I would actually, just before this report, I will place my pending orders. And again, I'll post all this on the platform. So just before this report is due out, I'll place my pending order just before this report is due out, and possibly have my first attempt at trading at the markets. So if my orders are taken and I'm in a live trade and I lose out, obviously if I'm profitable from that trade, then that'll be the end of trading for today for me. But if that trade ends up being a losing trade, the trade I place around this time, if I end up losing out on that trade, then obviously I will stop trading and not trade anymore and wait till this report at 4 before I have my second attempt at the market. Now, I'm going to say something else. So again, at this time, I will reassess the market. Obviously, if I'm still in my live trade, or if my pending orders are still in place from the Germany report, then there's nothing I need to do. But if I've lost out on that trade, then this is the time to have my second attempt. I'll wait till this time. And then also, if I have my second attempt at this time, that will be my last attempt today. So I'll only have a maximum of 2 attempts at the market today. Now, again, I'm going to show you the reason why. And obviously, I've discussed all this in previous sessions, but I'll just keep reminding you over and over again so you can remember all these little nuances about trading. Because again, ideally, you can have 3 attempts at the market every day. So the maximum is you have 3 attempts. That's what I've taught you all. So you have your first attempt of the day. If you achieve your profit target with your first attempt, you stop trading. If you lose out on your first attempt, you go to the second attempt. If you hit your profit target with your second attempt, you stop trading. If you lose out on your second attempt, you can go for your third and final attempt. And if you lose out on that third attempt, you stop. If you hit your profit target with the third attempt, you stop. So that's the teaching I gave you, but that's just in general. But in specific, in some situations, you shouldn't be having 3 attempts in the market. So again, this week, I'm only going to have 2 attempts today, a possible first attempt when this German report comes out. And then if I lose out, then I'll possibly have a second attempt when this United States report comes out. But I will only have a maximum of 2 attempts today, and that's because of what's happening later on in the week. And again, that's why I always post, when I post my postings on a Monday morning, you can see I always give you an assessment of the economic calendar for the rest of the week, because it's always good to check what's coming out for the rest of the week. So we go to the next 7 days. So if you look at the next 7 days out, you can see there's some big reports coming out during the week. You have the GDP from the UK, unemployment from Germany. So there's some big reports coming out during the week, this GDP from the United States. But the big one is what I want to show you. That is going to shake the market this week. It's the report on Friday. So on the 2nd of October, on Friday, the 2nd of October, you have the United States unemployment rate or the non-farm payroll report. In fact, we're all going to trade that report together. So I'll post on the platform on the event section. The Zoom meeting will meet on Friday. We'll trade that report together at that time. But the meeting details will be posted on the platform. So this United States report, as some of you already know by now, it's a report of enormous importance. It's of huge importance, and it affects all markets. It comes out on the first Friday of every month. So the first Friday of every month, this US unemployment rate report comes out. It's highly anticipated by the markets. Everybody is waiting for this report. Everybody is expecting it. Everybody knows that it's coming out on the first Friday of every month. So usually the week leading up to this report, like this week, because it's highly anticipated, there's always a chance that the markets could just trend sideways for the whole week because of this highly anticipated report coming out on Friday. Non-farm payroll just means that, for those who don't know, because in America, they have a huge agricultural farming community, and they are excluded from this payroll assessment. So that's basically, it just means non-farmers. The farmers are not included in this payroll of unemployment. And of course, again, if you're new to trading, always click on that and read about what the report is all about. It's very important you begin to read about these reports of medium importance, high importance, understand what they're about, so you can make that judgment, like I said earlier, as to which report is more important than the other one. And that's the only way you can make that judgment, is from experience and reading about the report, and then also see how the market reacts to these reports. So again, that's why it's important at the beginning of the week to see what's happening for the rest of the week, because as you can see, what's going to happen on Friday is actually impacting our trading today. Because on Friday, there's a huge mega report coming out that could make the markets trend sideways for the whole week. And because you're aware of that, and that's why it's important to check the calendar for the rest of the week, because you're now aware of that. Coming back to today, although technically I could have 3 attempts at the market today, but in view of now knowing about the report coming out on Friday, which is a highly anticipated report, I'm only going to have 2 attempts today for that reason. So a possible first attempt when the Germany report comes out at 2 p.m. GMT plus 2. And if I lose out on that, I will have my last and final attempt around 4 when the United States report comes out, or the consumer confidence report comes out. So I'll only be having a maximum of 2 attempts at the market today in view of what's coming out on Friday. So again, this is, what trading is all about, is you trying to take your time, be patient, consider all the factors available on a daily basis, because each day is different. So this is why I say, you can only become a good trader, it's just experience, because you have to have a habit of, being patient, gathering all the factors, all the things that are available. Then you make an informed judgment as to, okay, based on all this information, what am I going to do today? When am I going to trade? Should I be trading at all? Obviously, we know today is not a public holiday, but again, it's just knowing that you have checked and you know that today is not a public holiday in the UK or the USA. And then finally, we also check the Market Watch website. So again, like I say, it's good to keep an eye on the financial news, know what's going on, because again, if there's something major happening in the financial markets, again, that could impact your trading and make you cautious and avoid trading. But again, like I always say, that that's the beauty about the currency trading, it tends to be major news. Most of what you see is the stock market news that tends to affect the stock market. But you can see that obviously we already know about the global pandemic, so that's nothing new anymore. Obviously, what will be new is if a vaccine is discovered that actually works. Obviously, now they're all in experimental stages. So yeah, it's just to keep an eye and see if there's anything major that could cause uncertainty. And that's the key word. It's just to see if there's anything major that could cause uncertainty in the market. So for example, if you saw in the news that China is going to ban all imports to USA, then of course that could rattle the markets and cause uncertainty. Or if you see USA, they're going to close all trade and stop all trade with China. So, it tends to be big news like that. Or if you find it's just like Donald Trump now, he's threatening to not leave office if he loses the election. Of course, now he's just talking. But if they actually do the elections and he starts to say he's not leaving the office, that will also cause uncertainty that, okay, what's going to happen now? Are they going to bundle him out or whatever? So again, it's just checking the news just to see if there's anything major like that could cause uncertainty in the market. So again, you can see that's the first 2 things I do every morning. Check the economic calendar. That determines what time I'm going to trade, or how I'm going to trade, or how many attempts I'm going to have on the market. Based on that, of course, you check, make sure there are no public holidays, and also check to see if there's anything major happening that could cause uncertainty in the markets. So now that I've done all that, I can now go to the charts and see. Of course, I'm not going to place any pending orders because I'm going to wait till the report comes out, the first one at 2 o'clock, the Germany report. But I'll still assess the market and see what's happening. So I'll start with D1, with the swing trading. So those of you who are already swing trading with me and following the swing trade, you know what we're doing. So for swing trading, I use the daily time frame D1. So again, it's just simply seeing where the moving average is today. So I'll put my cursor on this candlestick for today. So the moving average today is 1.1809. So that's today's moving average. So I'll just adjust my stop loss to 2 pips above that. So that'll be 1.1811. 1811. There we go. So that's all done for swing trading. So let's go to day trading. We should go to the 5-minute time frame. And then looking at the 5-minute time frame, obviously this is from yesterday. The Euro US dollar has been trending sideways since yesterday. So of course, if you've been following the daily trades we've been doing, you know it's been trading sideways since yesterday, and it's still trending sideways. That's the lower part of the sideways trend. That's the higher part of the sideways trend. So you can see my white lines demarcating the sideways trend. And then currently you can now see the pivot point is within the sideways trend. I'm not going to trade within the sideways trend. Of course, I'm not trading now. I'm not going to place any pending orders. I'll reassess the market again just before the Germany report. But for now, it's trending sideways. That's the high point of the sideways trend. That's the low point. Obviously, the market hasn't formed the market support. It hasn't formed the market resistance. That's just the high of the sideways trend, the low of the sideways trend. And the pivot point is currently within the sideways trend. But R1 is outside the sideways trend. S1 is outside the sideways trend. But I'll reassess again and see the state of play at 2 o'clock Rwandan time and decide what to do then. But for now, there's nothing to do. We're going to leave the markets alone, not place any orders, switch off my MT4, go and do something else till 10 minutes before that report at 2 o'clock. Okay, any questions? If you have any questions, you can either raise your hand to ask your question or send it through the chat box. Any questions? Like I said earlier, if there are no questions, then we all go and have a breakfast, so to speak. Hello, BNP.
Hi. Sorry, it's Adebayo.
Okay.
BNP. Hi. I know it's a question that you've mentioned about it before. You know, yesterday when we were trading,
yes,
we moved towards when it moves 30 pips towards trade, we moved the
stop loss
to the selling point, so that entry point. Yeah. So why? I know you did say that in order to maximize your profits, you wait till. I'm just thinking, is it not okay sometimes to just take that 30 pip at that time?
Well, again, I'm happy. Again, I always happy when people ask this question, because this is why I told you guys that psychology of trading is really the most important part of trading. You know, I always warn people that until you start trading, before you realize how important psychology of trading is and money management, because the emotions and the temptations and to do this and do that is so enormous. And let me actually bring up the whiteboard to show you something. Because like I said, you're now basing your judgment on emotions, not on objectivity. And, you know, obviously you guys are benefiting from my experience, but sometimes there's nothing wrong if you want to experience certain things for yourself. So, for example, you could start jumping out of the markets early, taking your 20 pips or 30 pips and jumping out, and doing that, and then see what happens in the long run. So you can then begin to experience it for yourself. Okay, let me show you what happens. So, you know, this is where trading can drive you crazy if you're not disciplined, if you're not non-emotional. So let's say, for example, you buy at 1.147. Don't let me do 7.2. Let me do 3.2. 1.432. Yeah. So you buy at this point. Yeah. BMP.
Yep. Yes.
Okay. So, and then your stop loss is 1.1412. And your profit limit is 1.1492.
92, yeah.
Okay. Now, this is what the market will do. It will come, take your order, then you're in the trade, then it's going up and down, but you're still there. And it goes up, gets to your 30-point limit, 1.1462. So it gets there, and then it starts to fall down a bit, and then you panic. You take your money, you get out. Probably make 25 pips or so, and then it just goes back up. This is where trading becomes very frustrating. And like I said, it's just because you guys are benefiting from my experience, but what you don't want to do is experience that. And then you then start kicking yourself. And again, I always warn people, you cannot trade in hindsight. You cannot trade in hindsight. And that's the mistake most people make. It's because something happens, I should have done that. Then they start trying to trade in hindsight and then mess up future trades. And that's why most traders are not successful.
Wow, the temptation is so real, though. Especially when you've lost like 3 times before. Before seeing that opportunity and saying, "Oh wow," you're so tempted to say, "Well, let me just take this 30 peeps now," because you've lost. But again, you've lost 20 peeps about 3 times, consecutively. I think, "Oh gosh." Again, at least you guess. Then you just. I didn't anyway. By the way,
I know. But I'm happy you're saying all this because it's good for those who are new to trading to hear this, because luckily you've been trading with us for a long time, so it's good for those who are new to trading that this call to hear what you're saying about the psychology and money management. Because when I talk about that to people, they think, "Oh, this is just boring," because like you said, the temptation is real. And like you rightly said, I'm happy you said that and you're testifying to that, which is very good. And I'm happy you're doing this because you said after 1 or 2 losses. So you see now, after 1 or 2 losses, your emotions are coming into play. And we said that during the session on trading psychology, that number one, during money management, we said losses are inevitable.
Yes.
We said losses are inevitable. We said whether you like it or not, you're going to have losses. But this is where being a good trader comes in. How are you going to maintain your discipline despite the losses? or is emotion going to come into play? So this is why I always warn people that the most important part of trading, and I'm happy you're bringing this up, it's trading psychology and money management. Because like you also say, if you now look at the other side of things, if you only keep capturing 20, 25 pips, when you actually know you're going to have more losses than profitable trades, you are not going to be a profitable trader. You are going to be a net loss trader. In fact, let me bring up that spreadsheet that we use on the platform. And the good thing is that, we're all using that spreadsheet together. So I'm not cheating. So it's, we've all been trading together with this spreadsheet on the platform since the 1st of August, and all the trades have put on this spreadsheet have been posted on the platform. We've done it together. So that's why we've been doing that. But it's also going to highlight a few things. Let me just look for that spreadsheet and bring it up. Okay, so let's go to August. So let's start at August. So August, when we started, August wasn't a bad month. We had a net profit of 120 pips. That was in August. Now, September is a bit of a rough month. We've only had a net, well, I should say because I don't know what you guys are doing. So I had a net of 33 pips only so far. We're already getting close to the end of the month. So you can see August net of 120, September net of 23. But overall, I still have 153.
Wow.
Yeah. Now, if I've been messing around, the only reason why this is happening is because of what I told you guys every day. Is it a good trading day or not? So if you had jumped out at 25 pips, just just make sure you write on your spreadsheet it was a bad trading day, because I didn't see because that's what I always want people, is that they will say, oh, this trading plan is not working, I'm not making money on this trading plan. But were you sticking to the plan? Were you the problem, or was it the plan? So that's why I said to people, they have to be honest with themselves as a trader. So you jump out at 20 pips, you jump out at 25 pips, no problem. Just write it down that it was a bad day. And like I told you, after 3 months of trading that plan, you go back and assess it. If you've been doing badly and you're not making money, this is after 3 months, you should then decide whether to make some tweaks to the plan. But you only make those tweaks if you have followed that plan to the letter for the 3 months. If you have not followed it to the letter, then you are the problem, not the plan.
You should blame yourself.
Exactly. And again, when I talk about to the letter, and this is where, like I said, experience comes in. Because, for example, if you did not trade on this day, then you need to note that. Because if you're missing certain days, don't forget, there's swing trading, like we've already discussed, and then there's day trading. So this spreadsheet is for day trading. And for you to be a successful day trader, you need to be available to trade every day. So you cannot be successful day trading if you just trade on the odd days. Because as you can see again from this spreadsheet, although I made a net of 120, but I couldn't, if I missed this day and I missed this day, and I missed all these sort of days where it was profitable and I was only available to trade when I was making losses, then you're not going to be a profitable trader.
Yeah.
So you can see this is the thing about trading that people miss out. You know, it's that consistency. So, I mean, we covered that during the course. Are you a day trader or are you a swing trader? If you know you cannot day trade, then you swing trade. Of course, if you know you can't trade at all, then just leave trading alone. But for day trading, if you want to be a successful day trader, then you need to be trading the markets every day. Of course, if you know you can't, then you can just swing trade alone. But as you have experience with us on the platform, you can see to swing trade, you don't get an opportunity every day.
Every day, that's correct. Yeah.
So you can see there's really no easy way out with trading. It's not as easy as people make it out to be. And this is why I actually do this Tuesday morning sessions, and you can now see all those practical lessons and the theory we've done during the course. You can now see how it's playing out in practice.
Yeah. Thanks, that's helpful.
Yeah.
It helped me to further manage my emotions.
Yeah. Well, yeah, you're not the other one. It's not easy. I mean, that's why I tell people that, that's why I tell people two things. Number one, I tell people that, you know, you cannot be a good trader overnight. It just doesn't happen, because there's a lot of things you need to discipline yourself about, and it's very difficult. Even I too, I did not become good at trading immediately. It took me a couple of years of making mistakes, losing money, being reckless, all sorts. All what I'm teaching you, I had to learn the hard way and find out, because like I just told you earlier, when I started trading, I was making emotional decisions. I was just messing around with my plan. I kept changing my plan. But of course, over the first year or two of me trading, I mean, luckily I was able to reflect and be objective and to see that, okay, Remy, this pattern you're going and what you're doing is not working. And of course, I used to go for a lot of seminars. I used to read a lot. But most importantly, I was trading and observing what I was doing. And of course, I was not doing this with demo. I was doing this with real money. I was losing real money. I was losing thousands of pounds of real money. But of course, when you lose real money, you focus. You focus. If I always warn people that demo is exactly that. You're not actually trading when you trade on the demo. I always tell people that the demo platform is just for you to know how to use the platform. That's all. The demo platform is there, and I advise people to start with the demo, but the aim is just for you to know how to navigate around the platform. So you know what buttons to press, how to look at the charts and all that, but you're not really trading. Because when you're using the demo platform, the two most important M's are missing. Because when you're using the demo and fake money, psychology is not there. And your money management is not there because it's fake money, you can mess around. You only start trading really when real money is on the line. Because when you're trading with real money, now the most important M is there. Psychology. How do you behave when you lose real money? How do you feel when you now you're trading? With the demo, you're just playing video games, really. You're not really trading. You're just learning how to use the platform. It's when you start trading with real money, then you're now trading. Now you're trading because now you need to focus on psychology and money management, because just like you rightly said, and I'm happy you brought all this up, because with real money, your emotions come in. And when your emotions come in, more often than not, they mess up your whole trading. They mess up everything and that's why I always tell people that 95% of your success as a trader is down to trading psychology. But people don't appreciate that when I'm telling them that. But when they start trading, they start to, just like you're saying, they start to appreciate it. Because emotion is very big. Because that's what's, oh no, let me jump out. Oh no, I can't stand this. Oh, I've had a loss. It's like, how do you maintain your discipline? And it only takes work and practice. And then the other thing I tell people about trading is that this is, again, why I'm happy you're bringing all this up. I always say there's nothing like beginners, intermediate traders, and advanced traders. There's nothing like that. That's just a scam to get more money out of people. Because yes, I could tell people how to do an advanced course and get money out of you guys, but I'm not. There's nothing like advanced trading. An advanced trader or an experienced trader is just somebody who applies the basics well on a daily basis. So that's all an advanced trader is. It's an advanced trader now knows everything you're just discussing now, all these basics. An advanced trader knows to manage their emotions. An advanced trader knows to stick to his plan. An advanced trader knows about money management. An advanced trader knows he has to accept his losses. An advanced trader knows, in fact, you've been trading with me now for 2 months, haven't you, Adebayo?
Yes.
Has my plan changed?
No.
Have I done anything? Have I done anything sexy or spectacular?
Not at all.
Exactly.
Even when you're losing money, I don't see the emotions in your writing at all. You're just saying that.
Exactly. So that is all you need to do as a trader, is just to harness the basics. And that's what advanced trading really is. There's nothing really more to trading than you just now knowing how to, just like I did the analysis this morning, knowing that, okay, there's a report coming out on Friday. I'm not going to have 3 attempts today. I'm going to be careful today. It's just you knowing how to analyze market. Obviously, the more and more you analyze markets, the charts, the easier and easier it becomes, and the quicker and quicker you become. So that's all it is. So it's just that your analysis speed up because you're doing the same thing every day. So I always tell people that trading is not a game. When you want to make trading sexy and exciting, then now you're lost. You're not trading anymore. You're now doing video games if you want it to be exciting. It should be boring. You should just be doing the same thing every day, be disciplined and consistent. And that's where the success comes.
Yeah, and the result shows for it. Just like you've just brought up the spreadsheet now, it definitely shows that. When you're still making profits.
Yeah.
Yeah.
The losses will come. So in fact, overall, like you see, this month I only had a net of 33, but I'm not going to say because of that I'm going to change my plan.
No.
That's just being emotional. Because I know they're going to be good months, they're going to be bad months, but there's a consistency. But again, this is why I tell people to trade at least for 3 months with a plan. And of course, I've given you guys a plan to use. Trade for at least 3 months with that plan. And then if you want to make tweaks with that plan, make that tweak after 3 months, but based on objective decision. So like I said, number one, if 90% of the time is in bad days, then you'd already know what the problem is. But also, this is why I said you should make comments on your day trades. So like you've said earlier, I'm not saying you should do this, Adebayo, but it's an example. So you can say, for example, today I took, and this is why I say, I'm happy this is an opportunity to emphasize to everybody. I'm just, obviously, because I've just started trading, I'm too lazy to put all that there. But if you're new to trading, you'll put as much comments as possible in that column. That's why I use a spreadsheet. Put as much things as you observe. So for example, you can say today I took my profit at 28 pips. So you write it there and just keep observing that and then see whether you turn out to be profitable by doing that on a regular basis. So you write it there, or you say, okay, I observed that the market, that the market responded to the mortgage report of medium importance. So you write it there. So you just write as many things as you observe. So if you then observe that, because everything I keep telling you guys, I'm just saying it because I've observed this over the last 18 years of trading or 20 years of trading. But begin to observe it for yourself. So for example, if you notice that, let me just use as an example, this goods trade balance at 2:30. You notice that at 2:30 or 1:30 your time, this medium report comes out of good trade balance and the market reacts to it. Then you say, okay, oh, the market reacted to that US medium report of goods trade balance. Or you can write there was no reaction to the reports of medium reports. Then you keep observing that. Then after 3 months, you too can make that judgment that, okay, the market really reacts to this report. Or, oh, the market tends to react to this report, so I better make note of that. You see what I mean?
Yeah.
So this is where the hard work comes in as a trader to begin to make this observation. That's why I always tell people, don't just take my word for it. I think this is where I'm spoiling you guys a bit because I just say, okay, you know.
Although this explanation you're giving is really, really helpful as well. So at least that's how one can by themselves learn, you know.
Exactly.
You can now know that you've got the experience, you're able to observe, write those things down, then you can review it after 3 months.
Exactly.
And you're learning.
Exactly. 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 I couldn't have said it any better. Exactly. So thanks for that, Adebayo.
Thank you.
It's a very, very good learning point for everyone. Hello, Marlene.
Hi, good morning, Dr. Rami.
Morning, how are you?
Very well, thank you.
You should be sleeping.
I know.
Well, let's go ahead.
Okay, question. Now, I know that there are pros and cons between swing trading and day trading.
Yeah.
Based on my schedule, my focus is not day, but is swing trading.
Okay.
So just wanted to know, based on your experience over the years, if you have to compare two in terms of which one is more lucrative, what would you say?
50-50.
50-50.
I think that's, funny enough, that's the question I get asked all the time.
Okay.
I get asked that question all the time. It's 50-50 because the reason why it says 50-50, now again, I'll use this as an example. This is a good example again, this spreadsheet. Because again, we've been trading, all of us have been trading together on this spreadsheet, on the platform together since the 1st of August. But also, we've been doing that swing trade together. We've been looking for swing trade opportunities to get on the platform since the 1st of August. So if you look at it now, since August up to now, I've already made 153 pips. Isn't that right?
Correct.
But on the swing trade, we haven't made any money yet in that 2 months because in that 2 months, we were waiting for an opportunity. And now that the opportunity has come, we've only moved our stop loss to, you can see our entry. Can you see my platform?
Yes, I can.
So you can see where we entered at 1.1803.
Right.
We've moved our stop loss to the moving average just above, is now 1.1811. So really we're actually still risking about 8 pips, isn't that right?
Yes.
So we really haven't made any money yet. And we don't know what's going to happen with this swing trade. So yeah, it could continue to fall and we could eventually make 2, 3, 500 pips. But you can see we've already made, in that same period, we already made 153 pips day trading. So
okay,
it swings in both ways. So you can't say one is better over the other. And of course, if we were unlucky, because again, you can see, this is why there's no hard and fast when it comes to trade. You can see, again, on my, can you see my cursor on the platform?
Yes, I can.
You can see this is where the market broke the moving average and took our order. No, actually it was this one. It was this day, it took this order on this day, on the 16th of September. Now you can see the market went back up. Did you see that?
Yes.
So technically, we could have lost 100 pips. It could have gone all the way up and we could have lost 100 pips. So in the 2 months, we could have made 153 pips day trading, but lost 100 pips swing trading.
Yeah.
So we're just lucky that, in fact, this is another reason why we use 100 pips for swing trading, to give you enough room, because you don't monitor it every day. But luckily, yes, the market didn't take us out. The 100 pips kept us in the game, and we're now, about 100 pips in profit. But from a swing trade point of view, technically, we're still risking 8 pips.
Okay.
So yeah, there's no, I wouldn't choose one over the other. I do both. I don't choose one over the other. I wouldn't say one is, but yes. In fact, let me use this as an example, because this was a swing trade I did. You can see here, let me bring up a notepad. So you can see here, let's say for instance, you enter the market to buy here, this swing trade, and the let's see, the moving average there was 1.0882. So 1.0882. So let's just assume that's the entry point. And then let's assume this is where you got taken out at 1.1804. So 1.1804. So again, let's bring the calculator out because I can't do mental maths. So that's let's start again. So that's 1.804 minus 882. So you can see you would have made 922 pips on that trade.
Right.
So, but of course, although you could have made 922 pips, that would have been over what period of time? So again, that was on the 22nd. So that was in May, and this was in September. So from May to September, how many months was that?
4, I believe.
May, June, July, August, 4. Yes, 4. So let me bring up the calculator again. You're making me do mental maths this morning, Marlene. 922 divided by 4. That's not bad. So that's an average of 230 pips a month you would have made. So, like I said, it's really no. Obviously, I'm not saying that's not what happens all the time. Yeah, but it's just to show you that you can't really choose one over the other, or say one is profitable more than the other.
Okay.
And I just do both.
All right, thanks a lot.
Like I said, everyone, if you need to go to work or have anything else to do, you can log off. But like I say, I'm available to ask, take all questions till the bitter end. And once there are no more questions, we'll end. Any more questions? Any more questions, comments before we go for breakfast? So there are no questions in the chat box. There are no hands up. Okay, going, gone.